expansionary territory, but only just, and we've had 2 months of contraction. Do you think that we can sustain above 50 points going forward?
Good afternoon. Well, let's hope so. Remember, we are only just, as you note. If you look at the subsectors, the current business activity was actually negative, but I think there we can attribute a lot of it to the auto industry strike, which obviously had an impact on the motor industry. The broader auto industry side is probably about between 10 and 11% of the manufacturing sector as a whole. If you look at the numbers that actually made these, the headline number positive, it's the forward-looking numbers. New sales orders, expected business activity. Now, though both those sectors look forward, but both those sectors peaked early in the year in February and has been deteriorating from February to now. And for the first time, we are starting to see those numbers coming in better. Which means that the index, when you look at the sector, the expectation going forward is positive. And that was the key element that actually brought us above the 50 number, above the number where we are actually expanding and where the sector is positive.
Because the PMI is mostly a sentiment-driven index, do you think that perhaps businesses are being overly optimistic given what's playing out globally, or do you think we are going to see a turn in the trend line here?
Look, I hope we are seeing a turn in the trend line. Remember, this is a month-on-month number. So if we had 2 negative months, that doesn't mean that we've turned around growing. All we do is we are not deteriorating from those 2 negative numbers, and we are slightly better, and it's ever so slightly better. The key would be, if we look at those, the sub-indices that look forward, if that is actually going to come through or not, and if we're going to see that coming through. My view is that underlying there is a lot more positive expectations within the sector, which means that if the sentiment is positive, it's positive because they are obviously starting to see some positive benefits going forward. But it's very slightly, it's a very small positive number.
So demand is picking up. Also just looking at the rate of job losses, because that's also starting to taper off, and that's really good news.
Well, it is tapering off. The speed at which the sector is shredding jobs is slowing down. It is still below 50. So it's still contracting. It's just the pace of contraction is slowing down, and we've been contracting now for a few months, which is negative. And one would like to see at some point that the manufacturing sector starting to create jobs again. Unfortunately, it is still slowing down, although the pace of slowdown is not at the same level as it was before.
Of course, that's not just a problem here, that's a problem globally at the moment, isn't it? And we've seen those US jobs numbers coming through and pretty negative for the most part. At what stage do you think we actually start creating employment? Because we're not going to go from shedding jobs to just creating jobs. We should probably stagnate for a while in between.
Look, I think if you look at these numbers and if you look at the small changes between below 50 and above 50, we are currently in that range where we're almost stagnating. And you will only start to create jobs if you go above 50 in a quite concerted, aggressive way. And I would say levels closer to 55 or even 60, you can say that we are really starting to re-employ people. At this point in time, it is at the stagnation stage. We are on balance shedding a few jobs, but going above 50.5 or 51 or 52, that's not going to create large-scale employment again. We need to go substantially above those levels.
Just looking at the pricing in the subsectors, and that's sitting at 60 index points. So yes, we're seeing nice increases there. Tell us how that sort of is affected by the local currency, the rand, that has been very strong.
Look, I think the rand does play a big role, and the big role is the input cost in terms of what we are seeing. But again, remember, we came from a level mid last year or late last year where we saw a dip in those prices. And I think this can be related to what you are seeing in the PPI. Remember, we're talking about the manufacturing side. So the volatility and the swings in the PPI will be reflected in these numbers. However, do not see the fact that this number is stronger on a month-on-month basis. I don't foresee any major impact on inflation, and neither do I see a change in the expectation for interest rates next week. When we got the July number, we were quite confident that there's starting to become room for an interest rate cut. Although this is slightly positive, our view is still that there's ample opportunity for a cut in interest rates, and even though the price index there is showing a bit of pressure, this is very small in compared to the bigger picture.
How does this tie in with some of the other economic data we've had over the past couple of weeks? We had those second quarter growth figures disappointing at 3.2%, and of course we had the private sector credit extension numbers yesterday. Although that had ticked higher, corporate demand for credit was lower. Does that tie in with what you're seeing here?
Yeah, it does. But remember, this is the PMI is a number that's trying to forecast. It's a kind of a leading indicator. And if you look at the PMI and what you subsequently see in the underlying GDP, there's a close correlation between the two. The manufacturing sector is about 15% of the economy, so it does play a role, and is one of the critical aspects in terms of exporting and in terms of employment. So when you look at the PMI looks forward, and that is usually a predictor of what you're going to see in the underlying economy. So if you start to see stronger PMIs going forward, it will have a good prognosis for the manufacturing element in the underlying GDP. I just think we have to realize that 50.3, it is only just positive.
Theo, looking at the Chinese PMI, it is PMI day, of course, on a global level. We're also awaiting the ISM number out of the US later on today. Chinese PMI at 51.7. We saw a peak in April of around 55.7. So things slowing down in China as well, and citing, of course, the US demand as one of the biggest issues. We know unemployment is still going to be an issue there as well.
Again, any number above 50, meaning it is growing relative to the previous month. So although the pace of growth has slowed down, it is still expanding, which is positive. And I think that it is, but it is unfortunately not at the level where one can be confident of it. If you are the levels just above or just below 50, it means that you're almost on the brink of either breaking either way. So it's positive, it's great, it is on a month-on-month basis, it is going better, but it is still, the numbers are not convincing in terms of the strength of the confidence.